In a surprising turn of events, global oil prices have taken a sharp dive, sending shockwaves through economies worldwide. The Kremlin has sounded the alarm, cautioning about an impending economic storm that could reshape international financial landscapes. But what triggered this sudden drop? How is Russia, a major oil exporter, reacting? And what does this mean for the global economy and for you? Stay with us as we delve deep into the unfolding crisis, breaking down the causes, implications, and potential outcomes of this significant development. The plunge in oil prices, what happened? As of early April 2025, the global oil market experienced a significant downturn. Brent crude, the international oil benchmark, fell by approximately 2.5%, settling at around $63.97 per barrel. This marks a staggering 15% decline over just 4 days. Such a rapid decrease has not been observed in recent years and has raised concerns among economists and policymakers alike. Several factors have contributed to this sharp decline. Escalating trade tensions. The recent imposition of new tariffs by the United States on major economies, including China and the European Union, has heightened fears of a global trade war. These tensions have dampened economic growth prospects, leading to reduced demand forecasts for oil. OPEC Plus production decisions. The Organization of the Petroleum Exporting Countries, along with its allies, collectively known as OPEC Plus, unexpectedly decided to increase oil production. This move has added more supply to an already saturated market, exerting further downward pressure on prices. Market speculations. Investors, reacting to the aforementioned factors, have engaged in speculative trading, amplifying the volatility in oil prices. The surge in trading volumes for Brent crude futures and options underscores the heightened market anxiety. These intertwined elements have created a perfect storm, leading to the current slump in oil prices. Russia's economic vulnerability. Russia stands as one of the world's leading oil producers, with a significant portion of its national revenue stemming from oil and gas exports. The recent price drop poses substantial challenges for the Russian economy. Budgetary constraints. The Russian federal budget is heavily reliant on energy revenues. The Urals blend, Russia's primary export oil, has seen its price tumble to approximately $53 per barrel, well below the $69.70 per barrel benchmark set in the 2025 budget. This shortfall could lead to budget deficits and necessitate spending cuts or increased borrowing. Defense expenditures. Amid ongoing military engagements, notably in Ukraine, defense spending has surged. A decline in oil revenues could strain resources allocated for these operations, potentially impacting Russia's strategic objectives. Currency fluctuations. The Russian ruble's strength, influenced by oil revenues, could face volatility, affecting inflation rates and the broader economy. Recognizing these vulnerabilities, the Kremlin is proactively seeking measures to mitigate the economic impact. Kremlin's response to the crisis. In response to the plunging oil prices, Kremlin spokesperson Dmitry Peskov emphasized the administration's commitment to closely monitor the situation and implement strategies to counteract market volatility. The Central Bank of Russia has also issued warnings about the potential risks prolonged low oil prices pose to budget revenues and deficit reduction efforts. Potential measures under consideration include fiscal adjustments, revising budget allocations to prioritize essential sectors and reduce non-critical expenditures. Monetary policies, intervening in currency markets to stabilize the ruble and manage inflationary pressures. Diplomatic engagements, collaborating with OPEC Plus members to discuss potential production cuts or other strategies to stabilize oil prices. The effectiveness of these measures remains to be seen as the situation evolves. Global repercussions of the oil price drop. The ramifications of the declining oil prices extend beyond Russia, impacting the global economy in various ways. Energy sector turbulence. Oil companies worldwide may face reduced profits, leading to potential layoffs and decreased investments in exploration and development. Stock market volatility. Major.